Assalamualaikum and hi everyone. Today we are going to present about why Bank Negara Malaysia monetary penalty on Bank Islam for operational and compliance issue. Our group has 5 members, so this is our members. For the introduction, I will pass it to Mimi.
Bank Negara Malaysia (BNM) has imposed a total administrative monetary penalty (AMP) of 3,445,000 on Bank Islam for 2 main operational and compliance issue disruption, which resulted in penalty of Rm 1,745,000 and failure in section screening requirements, for which bank was fined Rm 1,700,000. Between the 1st June 2023 to 31st December 2024, EIMB experienced multiple unplanned downtimes that caused prolonged disruptions to its banking services such as e-banking, debit card system, and online payment transactions. This has impacted the availability of essential banking services for its customers and counterparties.
As you can see here, for the prolonged service disruption, BIMB was fined due to the bank failed to comply with the risk management in technology policy document regarding high availability of a critical system. And for the sanction screening requirement, BIMB was fined due to the bank failed to comply with anti-money laundering and countering the financing of terrorism and targeted financial sanctions.
I will explain the 2 key issues highlighted by Bank Negara Malaysia regarding Bank Islam. First issue regarding non-compliance with the Islamic Financial Service Act 2013. Firstly, Bank Islam was found to be non-compliant with several key regulatory requirements under the Islamic Financial Service Act 2013. This is a major concern because the Islamic Financial Service Act serves as the main legal framework governing Islamic financial institutions in Malaysia. When a bank fails to comply with that regulation, it makes the overall Sharia governance structure weaker and reduces the level of trust that regulators have in the bank operations. This issue also creates question about how well the bank internal control works and its commitment to maintaining strong Sharia compliant practices. Now, we are going to the second issue. The second issue is weak technology controls and the risk management in technology, which lead to prolonged service disruption. The Bank Islam had prolonged disruption in online banking and transaction services. This problem in technology control impact the stability and reliability of the bank digital platform, leading to failed transaction and service stop. Such disruption not only cause trouble for customer, but also go against the principle of maslahah, which stresses protecting the well-being and needs of users in Islamic finance. A stable and secure technology environment is very important to maintain customer confidence, especially in today more and more digital banking landscape.
So now, let's elaborate the issue that has been started before. The first issue is the BIMB non-compliance in relation to prolonged service disruption. For this issue, we can relate it with the 2 risks, which is operational risk and technology risk, which we can refer to the potential of any technologies and operational failure that can be disrupt the business operation that can be happen. The disruption of its banking service, including the transaction of internet banking and also debit card system. So now let's see what is actually happening. BNB was found to have breached Section 58(1)(a) of the ISA and the paragraph 10.32 of the RMITPD, which require cumulative unplanned downtime affecting the user interface must not exceed 4 hours on a rolling 12 months basis, and the maximum tolerable downtime of 130 minutes per incident only. Okay, so now let's see what is the consequences and the importance of BNM action towards BIMB. So as we know, BNM carried out its roles to ensure the stability of all aspects of the financial institution in Malaysia. And one of the BNM agenda is to increase the efficiency of the e-payment in our country and to go cashless. So, if BNB does not take any action from the problem that is happening, the customer will lose their trust with BIMB system. Not only disrupt the BIMB reputation, but also disrupt BNM goals to achieve cashless society in Malaysia.
Next issue is weak sanction screening and anti-money laundering, also counter financing of terrorism. First, Bank Islam was fined by BNM for RM1,745,000 due to prolonged service disruptions between June 2023 and December 2024. BNM said the bank was found to have delayed system recovery, which affected its digital banking services. Next, BNM has fined Bank Islam RM1,700,000 for failures in sanctions on anti-money laundering and countering financing of terrorism. These failures included delays in screening non-customer database, resulting in late identification of matches with specified entities. Hence, BNM said Bank Islam has since begun upgrading its IT systems and recovery plans to prevent future incidents and also enhance its sanction screening systems and procedures.
Next, I will briefly explain the conclusion and the key solution. Bank Negara Malaysia imposed a penalty on Bank Islam due to three major issues. The first one is the bank failed to comply with the important regulatory requirement under Islamic Financial Service Act 2013. Second, there were prolonged system outages that did not meet the standards set under the RMIT framework, showing the weakness in their technology control. The third is the bank had ineffective AML or CFT and section screening process, which increased the risk of unlawful and non-Sharia compliant transactions. So, by all of these issues collectively lead to the Bank Islam from being fined by Bank Negara Malaysia. Therefore, there are three main solutions are recommended. The first one is to upgrade the bank IT infrastructure to ensure the system stability and RMIT compliance. The second one is to strengthen AML or CFT and section screening through automation, regulatory audit, and staff training. The third one is solution is to ensure Sharia governance and overall compliant oversight through the continuous monitoring and independent review. So by implementing this solution, banks can improve their operational resilience, rebuild regulatory trust, and ensure stronger adherence to the Sharia principle.